Thank you for your commitment to professional development in grants administration. This e-learning resource will train you on the grant reimbursement financial reconciliation process. This training was developed by the Office of Grants Management. The mission of Admin's Office of Grants Management is to standardize, streamline, and improve state grant-making practices, as well as to increase public information about state grant opportunities. This curriculum was developed by the Office of Grants Management and Nonprofits Assistance Fund in consultation with the Subcommittee of State Agency Representatives from the Departments of Natural Resources, Education, Public Safety, Health, and Employment and Economic Development. Nonprofits Assistance Fund's mission is to build financially healthy nonprofits that foster community vitality. Their financial experts help nonprofits strengthen their capacity to address unexpected events, finance new opportunities, and realize strategic goals. They fulfill their mission by helping nonprofits thrive. In grants administration, we come from a place of common purpose. We have a commitment to transparency, mutual respect, and customer service. We strive for pride and professionalism in our field and are dedicated to public service and stewardship of state resources. We value building and maintaining positive relationships with grantees. We accept the responsibility to clearly communicate and ask questions from a starting point of seeking to understand. We demonstrate patience and persistence as we move toward an outcome where the reward of having ongoing dialogue results in the most amount of information being shared based upon trust and mutual respect. Our work is guided by 4 principles. First, value. Our work has purpose and clearly contributes to meaningful outcomes. Secondly, we utilize risk assessment to address the continuum of grantees and grant practice so we can effectively identify high, medium, and low risk. Third is capacity. We strive to efficiently and competently complete our work to meet the minimum requirements with our available staff resources. And fourth, we always understand that minimum requirements in state grant policy must be met through our practices and procedures. The training outcomes for this deck will help you build confidence and comfort with the grant payment financial reconciliation process. It will help you build skill capacity on the principles of grant payment financial reconciliation, and it will provide a baseline understanding of what an effective grant payment financial reconciliation process is. We'll first look at the changes that became effective as of July 1st in the policy 0810. The definition of financial reconciliation has had some changes. State agencies must conduct a financial reconciliation of grantees' expenditures at least once before final payment is made on grants of over $50,000. A financial reconciliation involves comparing a grantee's request for payment for a given period with supporting documentation for that request, such as purchase orders, receipts, and payroll records. Now, agencies can choose to identify and document what source documentation will be used and which grant project expenditures are subject to financial reconciliation. This next slide outlines the changes in the grant monitoring policy that become effective as of July 1st. First, monitoring and financial reconciliation must be completed before final payment is made. Secondly, agencies with multiple grants of similar grant periods with the same grantee may choose to identify, through a documented risk assessment, which grants represent a sample that will receive monitoring and financial reconciliation before final payment is made. Third, agencies can choose to identify the standards for source documentation for financial reconciliation and establish which grant project expenditures are subject to financial reconciliation. Here are some additional definitions and changes to those definitions that were made effective July 1st, 2017. The grant period is the start and end date of the grant contract. The grant monitoring visit involves both state granting agency staff and/or contractors and the grantee and occurs before final payment is made. It may be conducted on site or by phone. The purpose is to review and ensure grant progress, address any problems before the end of the grant period, and to build rapport between the state agency and the grantee. A definition change was made to the Monitoring and Financial Reconciliation Plan. These next two slides will outline that. Agencies can complete a risk assessment of their grantees that contributes to their plan to monitor and conduct financial reconciliation of grants over $50,000 before final payment is made. The plan includes a timeline for completing the work during the grant cycle, including final payment. In addition, it includes a methodology and sampling method that agencies can use for conducting monitoring and financial reconciliation for grantees that agencies have multiple grant contract agreements in place with. Additional components of a monitoring and financial reconciliation plan include identified grant risk factors, such as staff turnover, prior performance, pre-award financial review results, delayed reporting, and/or any other grant risk factors that you identify through your agency. Agencies can choose to document this current plan and retain it on file as part of their written grants policies and procedures. The plan can be updated as needed. Now we'll look at the scope of financial reconciliation within the broader policy. This policy applies to all executive branch agencies, boards, committees, councils, authorities, and task forces that make grants. It applies to competitive, legislatively made, formula, and single and sole source grants. This policy replaces other state agency policies that concern grant monitoring, except when the state agency policy is stricter. What's outside of the scope and what this policy does not apply to are bonding and capital grants or grants in which the monitoring expectations are statutorily defined. However, this policy does not replace any applicable state or federal law, rule, or regulation which specifies a grant payment schedule. Now we'll look at the minimum requirement in the procedure that identifies financial reconciliation. State agencies identify which grants require a monitoring visit, which grants require a financial reconciliation, where the monitoring visits and financial reconciliations will take place, and which agency employees will participate. As we look at gathering the grant data for planning for financial reconciliation, now we'll identify the types of information you'll need in your planning. First is the categories of grantees. For example, new grantees, multiple grants of similar grant periods with the same grantee, grantees with multi-year funding, continuation grantees, or high priority grantees. Next are the grant amounts and grant periods. Additional grant data to gather include the grant payment conditions. Now we'll focus on the risk assessment that highlights the changes effective in the policy as of July 1st. Agencies can choose to identify which grant risk factors contribute to monitoring and financial reconciliation frequency. A granting agency with multiple grants of similar grant periods with the same grantee can choose to identify a sampling method of which grants will receive monitoring and financial reconciliation before a final payment is made. Finally, any special circumstances with the grants that you administer can also be taken into account when planning for financial reconciliation. Additional planning tips are to include where the financial reconciliation will take place, on-site or through desk review. Finally, you'll want to think through the process, procedures, and documents for financial reconciliation. What about grant funds that are advanced? If grant funds are advanced on grants over $50,000, then the requirement in the state policy on grant payments kicks in. This policy requires that an agency justify advancing grant funds. This can be done in two ways. It can be done through the language in the grant contract agreement, and it must be maintained in the official grant file, that documentation. And the terms of the advance payment must also be reflected in the grant contract agreement. Now we'll focus on the reconciliation requirement. A state agency must reconcile an advance payment within 12 months of issuance or within 60 days of the end of the grant period. Now we'll move on to definitions that we'll talk about in this training. A given period with respect to a financial reconciliation is referencing the payment period. For example, some grantees submit for monthly or quarterly reimbursement. The grant period is the start and end date of the grant contract. Direct costs are expenses that are required to carry out a program. We'll provide more detail on that when we're in step 4 of our process. Indirect costs are expenses that benefit all areas and programs and cannot be specifically assigned but are essential for the health and functioning of the grantee. These can also be called overhead, administration, management, and we'll provide some more detail in step 4. We'll also discuss cost allocation. This is the process of attributing and assigning costs to a cost object or cost center. It also means assigning a common cost to several cost objects. We'll point to more examples in step 4. Now we'll start addressing the grant payment financial reconciliation steps. The first step, step 1, where do I start? The first place we start is identifying the payment to be reconciled. This is also listed in the procedure of the policy. The procedure requires that agencies identify which grants require a financial reconciliation, where the financial reconciliations will take place, and which agency employees will participate and are responsible. As we look at step 1, we think about time and place. So you'll want to think about the time period of when that reconciliation will take place during the grant. You also want to think about and plan for how long the process will take. And finally, will it be done through a desk review or through an on-site review process? Here's an example of how the grant payment financial reconciliation is a step within a broader monitoring plan. Slide 26 also highlights the timing of that grant payment financial reconciliation within the grant period. So these are factors to consider as you move forward with your work. Other key factors to keep in mind are the grant period and the type of grantee. This will help you determine when you conduct those reconciliations, and it will help with assessing the workflow process and planning for the broader set of grant administration requirements within the grant portfolio. Now we're moving on to step 2, which is notifying the grantee. You want to send the grantee a notification to communicate and schedule the reconciliation activity. You want to request a grantee response within a time frame that allows both you and the grantee enough time to prepare and discuss logistics. It's helpful to provide a few specific options for the grantee to choose from. There may be components of the reconciliation that will require electronic submission. There may be some hard copy information you want to review or additional formats. And you also want to allow ample time for the grantee to respond. As we look at step 2, here are some considerations to take into account when you're contacting grantees. Certainly you want to look at the relationship that your granting agency has and hope to have with the grantee. Keep in mind if there's been frequent, consistent, and transparent communication between the grantor and the grantee. And finally, you want to make it clear to the grantee who they can contact with any questions about the process. Now we're moving into step 3, which is when you receive the documents from the grantee. Here are some examples of documents you may receive or review on site. Invoices, timesheets or payroll, receipts or canceled checks, general ledger, bank statements, check stubs. The key question is really, what do you need to see in order to verify the payment and ensure that it was an eligible expenditure? As we look at baseline documents to use, certainly you want to address what's in the executed grant agreement. What are components within the grantee's approved budget and within their approved work plan? Slide 34 is a way for us as state agency grant staff to understand grantee budgets within their context. So this slide really points out that grantees have a broader organizational budget with different program budgets that flow in underneath. And so as you see under Program A budget, you'll see Grant E, which is one component of their broader budget. Slide 35 addresses the financial reporting from the grantee perspective. And some essential information that grantees utilize for their strong financial management include their annual budget, their income statement, where they're looking at their actual financials and comparing it to the budget, their availability of cash to support their needs, their understanding of the balance sheet, which is really looking at assets and liabilities. And finally, they're always looking at what are the program activities that we're doing as a result of our investments. So what's happening with their outcomes and what's happening with their outputs. Now we're at step 4. This is where we're reviewing and analyzing those submitted documents. And so what will help us with broader analysis is first to know, is the grantee using cash or accrual accounting? And what allocation method is the grantee using for their expenditures? So when looking at grantee accounting methods, we want to understand that cash accounting is a process that recognizes income and expenses when funds are received or dispersed. Accrual accounting recognizes income and expenses when the activity takes place to create the revenue or obligation to pay. Now we'll move into expense types. Direct expenses are those expenses that are required to carry out a program. Indirect expenses are ones that benefit all areas and programs and cannot be specifically assigned but are essential for the health and functioning of the organization. Indirect is also called overhead, administration, or management. Now when we look at slide 40 and we see these different types of expenses and we think about what's direct or what's indirect, and really the answer for almost all of these, except for board meeting expenses, is it depends. It depends on how the grantee has established their work plan and approved budget. But again, to point out that board meeting expenses will always be indirect costs. Next, we're going to look at 4 different methods which are commonly used for allocation. There can also be other methods, but we're going to focus on these 4. So method 1 is a simple assignment of expense, and it can be used for expenses that are clearly identified or quantified. Method 2 is a formula based on use of staff time. This generally is the preferred method for all salaries and benefits. A third method is using a formula based on resource use. This can be used when the resource use is different for program areas and can be measured. Finally, the fourth method we'll look at is a formula based on full-time equivalents, or FTE. And this can be used for expenses that follow the people. Now we'll move into method 1, the simple assignment of expense. Again, this is a method that can be used when the type of expense has a relationship to a program that can be identified and quantified. In this example, you'll see how mileage and conference and meeting expenses can clearly tie directly to programs. Next, we'll look at method 2. This is the formula based on use of staff time. This method is used by most grantees since staff usually make up the largest percentage of the budget and can be directly related to functional areas. You'll see 3 different ways this can be tracked on the right-hand side of slide 43. The top section identifies number of hours by program. The middle section identifies the percentage of a staff's salary by program. The third column or section identifies actual salary by program. Next, when we look at method 3, this is the formula based on the use of resources. And this method can be used when the type of expense has a relationship to a program that can be measured. So the best example for this is rent and use of building space. As we look at the example on slide 44, you can see that the way rent is allocated or cost or shared is based on program. And this is a very clear way to allocate rent. Finally, we'll look at method 4, which is a formula based on full-time equivalents, or FTE. This method is also used by many grantees since staff usually make up the largest percentage of the budget and other expenses often have some relationship to staff size. So as we look at the example on slide 45, it's clear that the FTE equivalent also generates resource use for office supplies and computer maintenance. So some key principles for distribution of indirect costs include, first, this cost distribution can be done through multiple methods. And the questions that we want to look at and understand when conducting a reconciliation are, what are those methods that grantees use to distribute indirect costs, and what are those common objectives? Next, we'll move into step 5, which is documentation of results. Your agency should have a format or template to describe the financial reconciliation results. This information can be included as part of a broader monitoring report when it's appropriate. Determining what information is summarized and directly reported to the grantee is an agency decision. What you want to make sure you do is provide the facts about what documents were reviewed, what information was analyzed, and to address any questions and/or discrepancies. It's also helpful to debrief with your colleagues as you're going through this process and documenting. So as you're documenting the results, you want to ask yourself, is any of the information missing, inadequate, incorrectly coded, outside of the grant period, mathematically incorrect, or are there any other questions or discrepancies that are coming up as you're reviewing the documentation? Next, we'll look at some examples of results and some common findings that can come forth with financial reconciliation. Sometimes personnel billed to the grant are not the same positions in the grant budget. Sometimes there's lack of proper source documentation or timesheets. There may be unreasonable, ineligible, or unnecessary costs. There could be cost items billed to the grant that were not in the approved budget. or there may be expenses that weren't billed within the grant contract period. So as we look at what to include in the documentation, we want to make sure that we're identifying areas of compliance and any questions if and when applicable. We want to make sure that we're addressing areas of follow-up. Are there missing documents that need to be submitted? We also want to identify, is the process completed or are additional steps coming as a result of the process? If additional steps are required, we want to identify what those are, clarify the expectation and the timeline, and who the appropriate agency point of contact is. We always want to thank and acknowledge the grantee's time and cooperation with the process as well. Slide 52 provides a sample follow-up letter that can be generated after a reconciliation is completed when there may be questions and items that need to be verified on site. This sample letter identifies that the next step in the process will take place at an on-site monitoring visit. Please reference our office for templates and examples for notification, reporting, and tracking your work on financial reconciliation. Next, we'll move into step 6, which is where we talk about addressing questions and conducting any follow-up. There will likely be questions, and the situation may require further follow-up in order to learn more and receive clarification from the grantee. Sometimes financial reconciliation results may generate concerns about how a program is operating. This is where agencies want to think about what circumstances does the financial reconciliation you've conducted require you to either consult with other people in your agency or across divisions, involve your supervisor, or consider amending or terminating an agreement with the grantee. We'll first talk about consulting. This is important because you want to consult with other colleagues who may have encountered a similar situation with another grantee with financial reconciliation questions, or they may have experience with the grantee and provide you with some additional perspective on questions that are generated. They simply may have a greater understanding of the issue, and certainly you want to have peers that you can trust and that you're confident in being able to be a sounding board for what you've learned and some of the questions you may have. Next, we'll look at this coordination and communication that happens. This is where you'll want to troubleshoot how to approach follow-up with the grantee, with colleagues across multiple divisions, particularly when you have multiple grants with the same grantee. So this is where we're looking at how does the message get coordinated. You also want to work directly with the grantee to resolve questions or any topics that the monitoring and reconciliation has raised. And certainly approaching those conversations and communication with the grantee can happen with respect and candor and honesty. It's important that you seek support and involve your supervisor in the situation when you're unable to resolve the issue with the grantee on your own, or you see potential red flags that indicate more follow-up may be required and generate additional questions, or if the issue with the grantee is potentially illegal. Finally, we're going to look at what do we do after the process is completed. Step 7 really talks about reflecting and adjusting. We want to think about what did I learn, and are there trends I see over time with financial reconciliation results? Is there a way that I can summarize what those common findings and results are for both the agency and grantees? Generally, financial reconciliations will always have opportunities to reflect learning back to both our colleagues and our grantees. So we want to think about how do we use this data? Particularly, how do I incorporate the results of financial reconciliation into the grant contract agreement or the pre-award process or the negotiation process? What is my process for developing and sharing training and technical assistance resources for grantees that have findings from financial reconciliation which require follow-up? And do I have a process for grantees to share feedback on our agency's reconciliation process? When we think about these three pieces, we're really looking at how do we improve our process and what are our lessons learned as we move forward. The Office of Grants Management has resources to assist agencies with financial review. Slides 62 and 63 show where on our website you can locate these resources. Finally, I want to thank you for your commitment to grant reimbursement financial reconciliation and your hard work in effective grant administration.